Welcome. Today we are going to learn about a sector that is about media and entertainment industry. We will learn about its features, growth drivers, and its performance and contribution in Indian economy. Also, we will learn about Z Entertainment, which is a part of media sector. Now, first we will see the contribution of M&E industry in Indian economy. The Indian entertainment and media industry has outperformed the Indian economy and is one of the fastest growing sectors in India. The M&E industry generally tends to grow faster when the economy is expanding. The Indian economy has been growing at a fast clip over the last few years, and the income levels too have been experiencing a high growth rate. Above that, consumer spending is also on the rise due to a sustained increase in disposable incomes brought about by reduction in personal income tax over the last decade. All these factors have given an impetus to the M&E industry and are likely to contribute to the growth of this industry in the future. Now let us see the future prospect of the M&E industry, Indian M&E industry. The first is the current market size is estimated at rupees 61,000 crore. Next, the M&E is projected to grow at compounded annual growth of 14% over next 5 years. The next maximum growth is expected in television and film segments. Also, more than 3,000 channels. It has a more than 3,300 national and regional TV channels. It has close to 1,000 films made every year. It has liberal FDI policies across all the segments of the industry, and it also has and also the government is focusing on regulations to give further impetus to the industry. The next will go to the key trends and the growth drivers of the M&A industry. The very foremost is the increasing per capita consumption and media penetration. India's growing per capita consumption and low media penetration are key drivers for the M&E industry's future growth. Increasing per capita consumption, helped by a growing middle class, is driving a rise in discretionary spends on leisure and entertainment. According to a report by Ernst& Young, indicates that between 2004 to 2008, Indian household income grew by 11% in the country's 20 largest cities. This increase in consumption signals a potential for growth in media penetration, also backed by India's low advertising to gross domestic product ratio, currently at 0.34%, half the world average of 0.75% and lower than the US, UK and China. Advertising spend is poised to increase as the economy grows. The next growth driver is the regional markets. Consumption in India is dominated by Tier 2 and Tier 3 towns, which account for 73% of India's urban consumption. Advertisers are shifting spends to these regional towns to capitalize on increasing consumer spending amid growing saturation in the major metros like Delhi, Mumbai, Kolkata, Chennai, Bangalore, and Hyderabad. Between 1999 and 2009, the share of English language newspaper in print advertising declined from 39% to 32% in favor of Hindi and regional language newspaper. A similar trend is occurring in TV, where ad volumes on regional channels have surpassed those on national channels. The growing importance of regional media is leading domestic and international M&E companies to invest in those markets. Similarly, regional M&E companies are looking to build scale and expand nationally. The next is the niche content, the growth driver for M&E companies. Changing lifestyle patterns Changing lifestyle patterns and growing disposable income have spurred the demand for niche content supported by strong advertiser interest in targeting wealthy and urban consumers. TV broadcasters have recently launched new niche channels genres such as home shopping, crime, science, travel and lifestyle, while newspapers have launched special interest supplements focused on luxury brands and youth. The next is growth driver is conducive regulatory environment and positive policy changes. There is an active cooperation between the government of India, regulatory bodies and M&E companies to introduce reforms that aid the development of the Indian M&E industry and spur further growth in the sector. The government has relaxed entry regulations and restrictions governing foreign companies in India and also raised FDI limits in the radio, TV, direct to home, that is satellite TV, and cable segments. The government is also encouraging digitization and addressability in the television industry by making it mandatory for cable TV operators to convert to digital addressable infrastructure by 31st March 2015, which is expected to drive significant growth in digital cable and DTH. Furthermore, the Phase 3 auction of radio licenses is expected to add approximately 700 radio stations in Tier 2 and Tier 3 towns and metros and increase the long-term profitability of the radio industry. The next is focus on profitable growth. Indian M&E companies implemented a number of cost reduction and initiatives during the economic slowdown in 2008 and 2009. However, renewed growth has increased competition and is putting further pressure on their margins. This is leading several M&E companies to improve on the efficiencies achieved during the slowdown by standardizing and centralizing repetitive processes, setting up shared service centers, and adopting technology to drive efficiencies. Indian print companies have made initial progress in this area by outsourcing printing facilities. The last key trend and the growth driver for M&E companies is digitization of distribution. The digitization of the Indian M&E industry's distribution channel is a key growth driver, helping to increase industry revenues, curb piracy, and reduce the cost. The Indian film industry is implementing a large rollout of digital cinema currently at more than 1,800 digital screens. This has reduced piracy and substantially increased the scale and reach of theatrical releases across the country. A game-changing phenomenon where 60% of box office collections are realized in the first week of a movie's release. The digitization of India's analog dominated TV distribution infrastructure is reducing the revenue leakages associated with underreporting and is increasing broadcaster subscription revenue. This is also expected to control the high carriage fees currently paid by broadcasters for distribution on analog cable. So these are the key trends and the growth drivers of the M&E industry.